Morning, everyone. We can see you jumping on. I think we have you all on mute at the moment. We're just going to give it a couple of minutes to let everyone join, and then we'll get started.
Well, we'll wait, Amanda, to kill the silence. I think pleased to report that the numbers are coming down here in Victoria. So it's a bit of good news to start the day, and hopefully that trend continues and we can start playing our bit of coming out of this this lockdown and getting on with a bit more life. But
yeah,
sure
like I think it's obviously the restrictions they've put in place are working, and hopefully it's only a couple more weeks before you guys get to start getting out and about. It's definitely a different vibe in Sydney at the moment, but we're still a little bit hesitant. There's been a couple of new cases in the last few days, so we were down to about 2. I think we're doing typically 2 a day, and they were able to trace them back. But I think this morning they came out and said there was a bus driver, so that will be interesting to see where that goes. But yeah, I'm hoping we can, fend it off as much as possible, and that you guys can get out of lockdown sooner rather than later.
Yeah, it would be good.
So we're expecting about 80 people this morning, which is fantastic numbers for a webinar. So we've got about 40 of you on already. And as I said, just going to give it a couple more minutes to let any latecomers join.
It's been a great response, actually. So hopefully we'll be able to help people see a few opportunities and perhaps help, I guess, businesses out there at the moment who are probably doing it tough or expanding, or there's all kinds of different news, isn't there, at the moment, where we've seen businesses that are struggling come to us, but also we've seen some businesses that have taken the opportunity that COVID's presented because they're providing the services that are core to the emergency response or to the food industry or wherever it may be. So we'll talk a bit more about that in the presentation, but it's an interesting time.
Yeah, absolutely. I think, as you said, we'll talk a bit more about it, but the fact that it's not all doom and gloom, there's quite a bit of positivity out there, certainly from certain industries. So, it's good. So we'll give it 2 more minutes, guys, and then we'll get started. A little bit of housekeeping. There is a Q&A opportunity. So both Arthur and myself really like our webinars to be interactive. So please don't shy away from popping a question in there. We'll answer them as we go along. If they're going to be long questions, we might push them till the end. But if you do have a question on a particular topic that we talk about today, please, we encourage you as much as possible to be interactive and to ask those questions. We will unmute at the end. So yeah, you can type it into the Q&A box, but at the end, we'll open it up to questions and actually allow, for you to ask anything, or we're happy to take anything offline as well if you, want to discuss any particular parts of the presentation. We've got about 46 people online now. I think we'll get started, Arthur, because I'm conscious of everyone's time.
Yeah, absolutely. People will join us once they're off their calls or whatever else. So absolutely.
So we are recording this session, guys. So we will share it with you and a copy of the presentation as well. But if you want to share it with any of your colleagues, feel free to pass over the link to the webinar. So Arthur, you're presenting. Do you want to just flick to the next slide for me? So we just thought we'd cover off the key topics that we're going to talk about today. So Arthur and I will just sort of flick through and take turns in talking about bits and pieces. But really, we just wanted to give you a bit of an overview on what's happening in our respective states, so in New South Wales and Victoria, from a debtor finance perspective. So I guess we're lucky enough to see some trends from our clients. So just to get an understanding of what's happening, which industries we're seeing demand from, which industries might be quiet at the moment. And I guess give you as brokers a little bit of insight into which areas you might want to focus your attention on. We'll talk about support options for clients now and into the future. We'll go through some case studies that of recently settled deals, so deals that we've done during the COVID period, just to give you an idea of what our appetite is. Arthur's going to talk a little bit about our appetite because it is very strong at the moment. So whilst we know that there's some other lenders that might be being restrictive in the debtor finance world, we're very much open for business and have a very strong appetite to do deals. So we'll talk through that in a little bit more detail. Then just some tips on, pitching to clients, trigger points, questions to ask, those sorts of things. And then we'll just talk about what we think we're going to see over the next couple of months.
So what's happening at the moment and what are we seeing? So we've obviously engaged with a number of our clients and also with the broker network and our teams. And generally speaking, everyone's quietly optimistic and certain, as Amanda said earlier, there are different parts of the business community where some are thriving, some are retracting, but ultimately we're seeing, and they're telling us a lot, that everyone's in that business survival mode. So they're just focusing a little bit more short term with an eye to the future, but generally speaking, there's a bit of business survival there. Everyone's adapting and they probably have done a good job at adapting to the new normal. So a lot of businesses, even here in Victoria, and many of us have spoken about this, that businesses have adapted to the point where they can still deliver and they still can produce, albeit that it's been fairly restricted and pretty tough, especially in the current lockdown. But we've only got a couple of weeks to go, so it's been great to see that still works in some instances, but not everywhere. But people have adapted and then certainly will be able to move on from there. Another thing is we're hearing different levels of access to capital. Businesses are not always able to get the funding that they need from some of the traditional lenders, so we're seeing some of that and hearing some of that. It's also important, we've shared from time to time through different social media platforms or whatever we could, that everyone needs to sort of keep up with that, the different legislation that changes and it's ongoing. So it'll be interesting to see how it pans out with regards to the ATO and whether or not creditors are able to take some more action in the not too distant future. So we're going to keep up to date with all those changes as they roll out. But something that's very important and something that hopefully we'll be able to sort of impress upon you through this presentation, and then if you speak to any of our guys as well, is that hopefully people are remaining positive and optimistic about the future. This will obviously evolve and it's obviously having an impact on the community and business communities is obviously struggling in certain elements, but if we can remain optimistic and be resilient, there is a time where this will end and we'll be able to move forward. But in the meantime, we're certainly going to be there to sort of help through that transition, through that period and beyond, because there will be a time where we'll all bounce back and there'll be a great and I guess a brighter future. Once again, the focus for small to medium enterprise, small business, the working capital is definitely something they continue to talk to us about being integral to their business, being able to ensure that they've got the funds to ensure that they can continue to trade and keep delivering everything that they need to in their businesses and to their customers. The continuity of supply, the continuity of being able to trade on, to expand in areas where they have to, or to be able to sort of manage their existing business so that they can be there when the time is right, is critical. And obviously a large part of that comes from that working capital and ensuring that they can have that available for them to do that. I think the other part that has been impacted quite considerably over the recent time, obviously we know retail and hospitality and tourism are extremely affected by the events of COVID-19, but some of those businesses have been able to evolve and change what they do, but there's a great deal that just haven't been able to do that. So we acknowledge that and see how that's impacted on the businesses that continue to operate. and changing the way that they focus what they actually do. We've also seen through quite some time now the change in working environments for staff and employees, where a lot of people are working from home or changing their actual working hours or staggering the way that they go to work. And we've seen a lot of cost management come into the businesses, so that people and businesses are obviously looking quite closely and scrutinising all areas of their business to make sure that they've cut their costs and only really, I guess, invest or spend money where they really, really have to. So it's quite a change in their focus. It's amazing how quickly people have had to adapt and change in these recent times. And we've had a number of clients that have had to make those sacrifices and those tough decisions, and it's not been easy for a lot of people. And while we go through all this, the other focus for small businesses has been, obviously revisiting their ATO repayments and revisiting what they need to do, what the obligations are. We've been told by a number of businesses that they're just sitting and waiting to see what happens with the ATO, and quite a number of them have actually paused their ATO repayments and whatnot, although they'll be reporting, and they're just waiting to see what happens at the end of the day before they make a commitment in that space. So there will be a time where that will need to be addressed. The question will be exactly when, and I guess how soon that might come.
Yes, I might just add to that, Arthur. I think the one thing that we have seen a lot is that a lot of the trigger points that would drive clients to working capital solutions like ours aren't there at the moment, but they're probably not far off, coming into businesses. So we would typically see businesses with some ATO debt. Wage pressure is a really big driver for clients to come to us, and obviously JobKeeper at the moment is keeping those businesses tracking okay with wages. So they've got a little bit of extra working capital that they would typically be using for payroll that they're able to put into other areas of the business. And I guess what we wanted to drive home today is that there's a little bit of, now's the time to start planning for what will your business actually look like without those government support. And when that ATO pressure comes back, and when that creditor pressure potentially comes back, how are your clients going to manage their working capital with those pressures in the business?
Yeah, absolutely, that's correct. Businesses are well and truly asking themselves that very question. So, talking about debtor finance in particular and the business suitability of what would attract a quick and efficient way of them improving their cash flow. So we know there's a number of people out there that their traditional banking loans or their traditional finances are struggling to come to terms and I guess addressing the pressures on these businesses. So we're, from our perspective, and our appetite, we're happy with businesses of all shapes and sizes, big and small. We're not too stressed on the business performance. Certainly over the COVID period and whatnot, we understand that obviously that's going to have an impact on businesses, so that's no longer an issue. We're okay with other commitments being in place. We're not too stressed about whether or not they've got huge amounts of equity in the business. We're very comfortable. In fact, we're encouraging in some instances business turnarounds and restructuring. This could be an opportunity to iron out some of those creases, some of those impacts that have been there in the business probably even before COVID, but certainly since, and restructuring in a proper and I guess a professional way to ensure that those businesses can then come out of this scenario having dealt with the issues before them, and we're actually quite comfortable with that. We're strongly in the business of trying to help startup businesses, or if they've just had a minimal trading history. So all those things that normally are something that the traditional lending lines are keen on, sort of seeing the history and to understand the people behind the business. We're more flexible and we're more concerned with where the business is going, looking after their working capital needs on where they're actually able to generate business and generate opportunities, especially through this COVID-19 period. So all shapes and sizes, and we're very, very flexible and very keen to speak to businesses throughout all kinds of industries, such as wholesale, transport, manufacturing, wet and dry hire, cleaning, maintenance, the security businesses, dare we say that, business services, recruitment, labour hire. So a wide, broad area of businesses in industry is something we want to talk to and get out there. I know a number of brokers are still engaging and having those conversations, looking for solutions. So people in those in businesses in those areas are certainly something we want to talk to and see where we might be able to assist.
Yeah, so I think just on that, we're starting to see an increased demand in both New South Wales and Victoria for wholesale businesses. So there's quite a big demand for food services right now. So anyone supplying into hospitality, supplying into some of your larger food retailers like Woolies and Coles, there's been probably the biggest demand, certainly from my side, in that area in the last 2 months. It was a period earlier in COVID where security had become a very big industry for us as well, just with obviously retailers like your Woolies and Coles and those sorts of people, your hotels and everything else, increasing their security presences to help with COVID restrictions. So there's certainly industries that we're seeing at the moment that are doing really, really well. As opposed to, you know, some of those ones that Arthur mentioned earlier, your hospitality, retail, tourism sectors, which, you know, are struggling a little bit. There are actually industries that are really thriving during this period, and they're just some of the ones that we're seeing the demand in.
Absolutely. So we thought we'd give you a couple of scenarios that we've been able to assist in recent times, and often in debtor finance, it's construction businesses are difficult to deal with and challenging when it comes to doing debtor finance. However, in this instance, we had a particular opportunity, a client out there that was looking for a solution to assist them with their business. They're in the construction industry. As I said, it makes it a bit more challenging from a debtor finance perspective. However, they got themselves into a position where they'd grown the business, but they'd actually ventured out into areas which they had very little expertise and knowledge about. And as a result, it impacted on their profitability, and they had some challenges, including the ATO as usual. They did a lot of contract work, but they also did a lot of work that was completed, finished work, and was contracted in such a way that would make it eligible for debtor financing. So we're able to look at the problem and understand what was going on in connection with, I guess, the current situation through COVID-19 and the lockdown and the challenges that we're facing with regards to the construction industry here in Victoria. The bank overdraft and traditional lending just had capped out. They just didn't have the capacity that they needed in there to help them get over that hump and continue on with what was quite a good, solid order book. And they needed immediate payment because they had obviously had a backlog of creditors, especially with core supply in the industry that they actually operated in. So they had their suppliers screaming out for money left, right and centre, and they had a huge pipeline of work of which we could fund a considerable amount of that for them. So what we did, we negotiated with the bank, who was a bit challenging when it came to actually doing a deeded priority, but we're able to get that ironed out and sorted out. So we're able to release the book debt. By getting that, we're able to provide them with a $1.1 million debtor finance facility. And we made it very easy for them to utilise quite a large portion of their debtor book to generate the funding they needed so they could pay their suppliers, sort out their ATO position, and get on with the work that they had ahead of them. So they were extremely thankful for that. It was quick, it was efficient, took away a lot of the stress once we got that all sorted out. And we did it in an area and an industry where traditionally people just walk away with it without looking through the detail and understanding what it is that we could do to help this business, for instance, move forward with some confidence and have the working capital so that they can continue on both sorting out the past, but also then moving forward to do some great work and continue to grow the business, which is looking extremely promising already. We also have another case study where, Amanda, I'll hand over to you to take over from here.
Thanks, Arthur. Yeah, look, I just thought I'd talk you through a case study where we've actually used multiple Cashflow products to support a client. So this one is a joint debtor finance, equipment finance transaction, which we're really keen to be looking at the moment. So we're keen to find ways to provide an overall solution for a client. So in this particular scenario, we're looking at a transport and logistics business, typically just doing general sort of local based work, and they picked up a lucrative contract for about 6 months. And that was to relocate demountable housing from New South Wales up into mining sites in rural Queensland. The biggest challenge for them is that the type of trucks that they had weren't really suitable to be on those rural roads with the weight of the demountables and etc. So they were having to basically contract that out, which was eating into their margin. So they really needed to get these particular vehicles themselves. The challenge was that our equipment finance team were a little bit concerned about their ability to service. So by adding in a debtor finance facility, it gives our equipment team some more comfort around the lend, because we can basically control their cash flow, making sure that the cash is coming in fast enough to make the ongoing repayments to the equipment team. So this is a really good example of when, you might be struggling to get a client locked into a particular type of asset lend, where you can bolt on debtor finance to give some more comfort and make sure that that ongoing cash injection is there for a client. Typically transport and logistic businesses have really high overheads. So obviously the costs of servicing the equipment, fuel costs, wage costs, and then obviously making sure that they're keeping up with their commitments is a lot of pressure on those businesses. The challenge, besides the equipment servicing, was also the fact that with this particular contract, our client was going to be basically 90% of their receivables ledger was going to be concentrated to this one client. And typically in invoice finance, that does make lenders a little bit nervous, because if anything happens with that particular debtor, then all the eggs are in that basket, and how will we recoup our funds? Also, as I said, the current trucks were unsuitable, so they really urgently needed to get this solution in place in order to keep on top of that contract. Flick to the next page for me, Arthur. So what we were able to do was we put in a 750K integrated solution. So that was an equipment finance lend for those additional trucks and trailers that they required. We did a debtor finance facility of up to 80% against the invoice. And more importantly, provided trade credit insurance. So actually provided some insurance against that major debtor, so that in the event they were to go into liquidation, there was some protection there. So therefore we didn't need to provide any concentration issues against the lend. So we're able to give them the full 80% against that debtor. And more importantly, we were able to put this facility, both the equipment and the debtor finance facility, in place within 7 days. So just a prime example of the appetite that we have at the moment, and the fact that we can work really, really quickly to get these solutions in place for a client.
Absolutely. I think the point I want to make with these two case studies is that look beyond what is traditionally there, look beyond, I guess, some of the constraints, and by us engaging both with the referrer and the clients, we've been able to tailor a solution that gets them where they need to be, both to clean up whatever needed to be done in the past, but also move forward into the future. So, we're not sitting there saying there's hard and fast rules, we can't do things. The answer is there somewhere, and we've got a range of products, not only debtor finance and equipment, but we've also got trade finance that can also be put into the mix so that we can assist where necessary. So we've got different levers and different ways of doing things and assisting clients on their very needs. So it's just about having that conversation, seeing what the solution can be, and moving forward.
Yeah, look, we're always keen to workshop scenarios. So as Arthur said, we're not really a ticker box lender. So we want to assess every deal on its own merits, and we want to structure something that works for the client. So we want to work with you as the broker or introducer, just to make sure that we can structure something that's suitable for a client. So there is a lot of options with debtor finance. It's a lot more flexible than some other types of funding. So we would encourage you to engage with us as much as possible, just to workshop scenarios and see what we can potentially do. So look, I just thought we'd talk about some of the traditional trigger points and things to think about when, to consider debtor finance as a solution compared to other types of funding in the market. So I would always say to a broker, ask your clients what their goals are for the next 12 months, but probably more important during the COVID period is, what's important to you over the next 3 months. So we're being a lot more flexible in terms of facility terms and things like that to support clients, whether it's a long-term need or a short-term need at the moment. So really it's asking that question is, what are the goals for the next 3 to 12 months? And what potentially is stopping you from achieving those goals? And if any of the triggers that they point out are, related to cash flow restraints, so it might be they want to pick up some more work but are concerned about how they might service it, that they want to, meet their commitments and obligations on time, which is going to become more important over the next couple of months. You might find as businesses grow now that they're starting to think about staffing and what they need to do. They might have had staff on reduced hours, unfortunately had to let some staff go, but they might be thinking about, as we grow, how are we going to replenish those staff and manage those payroll costs that come into the business. And it might just be more than ever, I think, certainly in the New South Wales book, clients are really focused on costs. So if it's, to reduce costs, so they might have other types of lending in there at the moment that's quite expensive. So how do they reduce some of their overheads and costs? It might be some of their supplier commitments are expensive because they're on terms and things like that with their clients. So how do they reduce their overheads over the next few months and get some of those costs down in the business? So if they mention any of those sorts of triggers for you, debtor finance is a great solution to consider. Really, you just need to look for, a client that has an accounts receivable ledger that has some terms on it. So if they're providing terms beyond 14 days on invoices, then this is a great alternative. We fund the invoice up to 90 days, end of month. So you've got a lot of flexibility on what you can do. Are they invoicing business to business, so not supplying to consumers? Are they invoicing for, completed work, supply of goods, or is it part completed? As Arthur said, we can do some scenarios where it's a little bit of a combination of both. Is there payables pressure? So is the payables getting high? Are they struggling to keep on top of those commitments? That's the great trigger for debtor. ATO debt, struggling with wages and super. These are all the triggers that you need to look out for. So just moving on to the next slide, we thought we'd just give you a little bit of a comparison on the typical types of products that clients might look at and where they sort of sit repayment-wise, costing-wise, those sorts of things. So when comparing debtor finance, most of our clients are probably looking at some of these products as well. So your non-bank unsecured business loans are a big one. We often see clients that have a couple of loans with unsecured business lenders. They're, typically max out at 250,000. They're typically high interest rates. They need to have minimum trading history. They need to have, bank statements and things to provide to be able to show that. And they also need to be able to make those repayments fortnightly. We see a lot of clients with overdrafts where, they've got their personal properties tied up in their lending. Whilst they're a cheaper alternative, it is mixing your personal assets into the business. So, and again, you can only really draw those to the maximum amount of equity that you have available in those properties. So does it really provide that ongoing working capital solution that you need? We see sellbacks from asset finance, which are great, but again, in the current market, do they have the right business performance to be able to leverage a sellback? So, debtor finance, when you compare it to some of those products, it's generally more flexible. The interest rates are generally very, very competitive, especially against unsecured business loans. Financial performance, as Arthur mentioned earlier, we're not so focused on, you know, a client's profit, what's on their balance sheet. We care more about the invoicing and the debtors. So there's flexibility there. If you've got a client, especially during COVID, that's had a downturn in revenue, this is still a great alternative for them. They have up to 90 days for repayments, and they're not having to pull out of their working capital to make those repayments. It's, you know, it's their debtors that are paying back the funds. It's an ongoing solution, so it sits with the business day in, day out, and it's designed to grow with them. So they're not going to cap out and say, you know, I'm at that 250 mark, or you know, and have to find another alternative. As their book grows, as their business grows, this product will grow with them.
Thanks, Amanda. Talk a bit about our an exciting new venture for us, but obviously another feather in the cap with regards to us looking at different ways to look after clients. So, Amanda, you're going to tell everyone a little bit more about the new product?
Yeah, absolutely. So we've recently entered into another acquisition. CML loves our acquisitions. So, and this was quite a strategic acquisition for us because we know that the future of debtor finance is heading into technology. We need to sort of adapt the product to be more flexible and have more ease of use for clients. So we are almost ready to go live with our new product, which is basically an integration with accounting softwares, MyOb, Xero and QuickBooks. And basically this allows us to play a little bit smaller in facility sizes. So where we've typically started at 100,000 in terms of limit, we can now go as low as 10,000. So we're really dealing with this smaller SME style clients. It is as simple as clicking a link and putting in, you know, your login details to MyOb and Xero. We can pull out all the information we need to make an assessment. So, you know, approved offers out for clients within 24 hours and access to the funding within a couple of days. And then from an ongoing basis, the clients won't be required to pull information out of their accounting system and upload it to us. We'll be able to do everything in real time from their accounting system. So as they raise invoices, we have access to them. And it provides a lot of flexibility around selective debtors. So it gives the clients the opportunity to turn on and off debtors. So rather than having to have a whole of book solution, this now allows us to selectively pick debtors that they want to fund. So it's going to provide a lot of flexibility for clients. Typically confidential, so it gives us again a broader range of clients that will now qualify for confidential funding, because we will have more visibility as to what's happening in the business, so we won't necessarily need to disclose as much. So this is a really exciting acquisition for us, and one that we think will provide a lot of value to your clients.
Absolutely. And I guess the focus from our perspective is about how do we say yes more often? How are we able to help small business and get them into funding as soon as possible in an efficient way that's not too hamstrung, that allows them to start venturing and growing. And it could lead into a more traditional product as their needs change and as they need a larger amount of working capital. But the idea is for us to have cradle to the grave, have the business opportunity from a funding perspective for SME businesses, so that we can assist them throughout their journey, or whatever part they're in at the moment. So they could be, you know, travelling along quite well, but need that quick injection of cash to, you know, the startups that Amanda was talking about.
Yeah, so we will be sort of doing a soft launch with this product over the next couple of weeks. So, you know, we'll reach out to our brokers directly, or the BDMs will reach out to you directly just to talk you through the product. But it is basically ready to go now. So if you do have any clients you think would have a real interest in an integrated product for invoice finance, please reach out to us, because we're ready to start having conversations about them.
Absolutely.
So I'm conscious of everyone's time, so we'll just push through this quickly so we have some time for questions at the end. So just wanted to reiterate, Arthur and I talk about this a lot when we do presentations, that debtor finance, whilst it might seem complicated on the outside, it's a very simple product, and the benefit to you as brokers is that the debtor finance specialists, the BDMs that work for our business, are the ones that will really do the grunt work for you. So once you've identified that a client might be suitable for invoice finance, you simply just need to pick up the phone and brainstorm that with us or one of our BDMs. We'll ask you for some very, very basic information: P&L, balance sheet, creditors, debtors, ledgers, and most importantly, a couple of examples of invoicing. And from that point, we'll run with it. So there's not the requirement for you as a broker to be a specialist in this product. You don't need to put together a credit submission. That's our job. We're happy to sit with you, with your clients early on, to help them understand the product, help them understand the benefits. So we would encourage you to, you know, just pick up the phone and brainstorm, and we'll walk you through the rest and do the grunt work for you. Again, with any referral that's sent through to us, there's great upfront brokerage as well as an ongoing trail. So we pay a trail for the life of the facility. So it's a great incentive for you to consider debtor finance as an option. And yeah, look, we have really high customer satisfaction across our book. It's a very hands-on product. We have dedicated client managers that look after the client day to day. So from a service perspective, you know, it's a great alternative to think of for your client, because we are really entrenched in their business and supporting them day in, day out. So look, just to recap, debtor finance is it's an unsecured product, so there's no requirement for property security. It increases that buying power. It helps with you know, costs in the business. It's much easier than traditional bank finance, so it's not going to take 3 months to put a facility in place. It's quick turnaround, providing that cash injection. As I said, it grows with you, with the client, so it's designed to provide that ongoing working capital, and it's flexible. So yeah, it's a great alternative.
I have a question, Amanda, and it's regarding trade credit insurance. And the question is, will it cover you for preferential clawback if your client goes into liquidation?
Do you want to cover that one, Arthur?
Well, ultimately, we are able to rely on the actual insurance cover that is in place. So therefore, we then are able to pay or get the collection through the insurer to pay out the liability for the actual amount that's outstanding in the facility. So we've done that several times. I'm not aware of a clawback situation where anyone's had to sort of pay anything back, and I don't believe that would be the case, because the charge over the actual debt is with us, and the insurance provider that we actually provide in our facilities generally covers that. So I guess the specific in regards to clawback is not a question for us. It's probably a question for a different industry, but from my experience and from what we've seen, I don't recall, and I haven't seen that ever happen. So generally speaking, where the insurance is in place and used for our facility, and we're assigned, and we always take that assignment so that we can cover that debt. If it's not our own trade insurance, we've been able to utilise that to extinguish most of the debt. It doesn't cover 100%. I think it's close to 90% in nearly all cases. But generally speaking, that's how that works. But we can get further advice on that if you've got a specific case you'd like us to talk to you about.
Yeah. The thing with trade credit insurance as well is that we as the lender have a lot of obligations to the insurer to provide them with ongoing information. So if the debt starts to age, things like that, we're obligated to provide that information to the insurer. So yeah, it's a pretty rare occasion where we wouldn't get an insurance claim paid out. Certainly in my experience here, it's yeah, pretty rare, because we've done all of those processes throughout to advise the insurer. And if the insurer pulls a limit away from a client, you know, basically everything up until that point is still covered by insurance, and then we just work with our client as to what to do, whether they want to continue supplying to that particular customer moving forward.
Yeah, absolutely. Oops. I've jumped a slide there, sorry about that. But this is our team. This is the guys on a day-to-day basis. You're always welcome to reach out to Amanda and I, but I know a number of you already have a relationship with these people. We thought we'd add them in there, and we'll send this presentation around, as Amanda said earlier, so that you've got everyone's details. But that's the team for the Victoria, South Australia and New South Wales region. So thank you all for joining us. But before we go, I just wanted to see if there's any more questions. We'll take people off mute, and if there's any questions, we'll quickly take them and see if we can answer them and help out.
Yeah, Kush, if you're able to take people off mute, that would be Fantastic. Otherwise, you're still welcome to type your question down in the box below. Or, as we said, you're welcome to contact us offline if you have any particular questions that you'd rather talk to us one-on-one about.
We've got another question, I think. Estimate on interest rate. So it really depends on the size and scale of the business. We try and tailor it in accordance to their needs and exactly what the type of business that they're in. So it really it's the average rate, if you'd like to sort of get a feel for it, is competitive with, I guess, unsecured overdrafts and things like that. But, Amanda, do you want to add to that?
Yeah, look, to give you a range, our interest rates go anywhere from 7% per annum to 12% per annum is really the range.
Yeah.
So if you're comparing that to other types of lending in the market, it is very competitive. Our interest rates are worked out purely on what a client draws. So it's not charged on book size or anything else. So it does give flexibility to the client. They don't necessarily need to draw the facility to its maximum amount.
Yeah.
So yeah, it's really, really competitive in the market. So that interest rate, as Arthur said, it comes down to the size of the facility, but also, I guess, the performance of a business as to where they sit on that scale. But we'll always work with you to try and structure a price that works within your client's needs.
I had a question regarding who looks after WA from a state management perspective. That's my patch. We're going to hold another presentation for that region. We just thought it'd be a bit early at 8 a.m. to get our friends from the West in on the call. So look out for that. But please reach out to me in the meantime. But we've got a gentleman named Paul Rose in Western Australia who looks after the state. But happy to take your call, or if you've got any questions, let me know.
So the next question was about BDM information. If you could just flick back one slide, Arthur, just to put those BDM's details up. We will also email this out to you all, so you'll be able to have those details. But yeah, all the details for our New South Wales and Vic team is there. We also have a BDM team looking after Queensland and also far North Queensland. So if you do pick up any opportunities in those states as well, we've got BDMs on the ground there that can assist.
Absolutely. Next question is about concentrations. Could it be up to 80% on one client? Amanda?
Yeah, look, it can actually be up to 100% on one client. So that's one of our major selling points compared to some of our competitors in the market. And the reason we're able to do that is because of the trade credit insurance. So as long as our insurer is comfortable providing the required limit for the client, we won't restrict them on concentration. So we do have quite a few clients who actually only have one debtor. It's 100% of their book, and we fund it to the maximum of 80. We also do something called temporary overfunding as well, which we haven't mentioned. So advance rates for clients are typically up to 80%, but we can also go up to 90% for clients during peaks and troughs. So if you've got a client who's got seasonality, we've got the flexibility to increase the advance rate. But yeah, certainly we try in every case not to concentrate clients.
Yep.
I don't think there's any more questions. You can, Kush, our marketing guys just left me a note to say you can unmute yourself if you did have any questions that you wanted to ask. I think we've had one more.
Yep.
Can we fund builders or progress claims? I'll pass that to you, Arthur.
Well, generally if it's a progress claim, it's unlikely. However, there are ways that we could look at their overall book and see where the opportunity might present itself. Because as I said earlier in our presentation, there are sometimes completed works, not progress claims. And we're also then able to look at other ways that we might be able to, but generally speaking, it's a lot more difficult if it's a pure progress claim. like you've probably experienced many times before, it makes it much more difficult. But often there are now works where there's more completion and or they do some smaller projects that we could look at as well. But if you've got a specific case when it comes to progress claims, talk to us case by case. If there is a way that we can move forward, we will find it. But yeah, that's generally, if it's genuine progress claims, it makes it very, very difficult.
Yeah, I think I'll just add on that. The thing that we don't like about progress claims is typically liquidated damages. So we will look at them case by case. We'll look at the actual contract. We'll also look at who the debtors are. So I'm looking at a particular deal at the moment where the debtors are actually federal government or local councils. So whilst it is progress work, it's to very reputable debtor. And the contracts aren't your typical construction style progress contract. So whilst they're on stages, it's not that floor by floor construction style progress. So it's really going to come down to the individual scenario. And also if there's, potential other, security that might be on offer, that again allows us to be a little bit more flexible. So the blanket rule is no, we typically don't do progress, but as Arthur said, reach out to us and we're happy to explore it on a case by case basis.
Yeah, and I will add that in recent times, I've actually had a situation where we've written to the actual head contractor. We've explained the areas in the contract that we're not comfortable with, and we, through the client, of course, advising that they're impacting on the actual funding available to the client. We're able to get a letter from the client, from the actual contractor, ceding those parts of the contract that we were uncomfortable with, and we're able to then fund. So we're able to actually then work with the client to give them the right advice that they can go back to the contractors with to get some of those things taken out. Doesn't happen all the time, but I've noticed in recent times, especially explaining that they're impacting on the funding of a small business, there are cases where we're able to assist and make things there a little bit easier for them.
Next question.
Yep, sorry, can you fund retention on money's held, Amanda?
Yeah, look, generally not. Debtor financiers don't love retentions. We don't like rebates. So what we might do in those scenarios is adjust the advance rate to cover those sorts of things. But generally, no, we don't look to fund retentions.
Generally not, no.
So Gavin's just asked if his client has a large exposure, do I check with you first to get insurance? So the answer to that would be, yeah, absolutely. Have a chat with us. If it's a well-known debtor, then we probably already have an insurance limit of some sort on the client. If it's someone smaller, then we can definitely request an insurance limit before we commit to anything with your client. So we'd much rather be open and honest about what we can do in advance before promising anything to you or your client. So you're always welcome to check with us on a particular debtor. We can run a credit check and request an insurance limit prior to actually progressing with any offer.
Quite often we might already have an understanding of that because we might be dealing with them already.
Yeah, so yeah, just have a chat with us. But yeah, we're more than happy to request an insurance limit in advance for you. We would much rather do that than get to the point of settlement and say, oh, we can't fund that particular customer. So yeah, absolutely, just pick up the phone, have a chat with us.
Okay, any other questions? Fantastic.
Awesome. Well, as I said, we've recorded this, so we'll send it out to you all if you want to share it with any of your teams or you want to revisit anything we've spoken about. We'll also attach the presentation for you. And as we said, yeah, please do not hesitate to pick up the phone to Arthur, myself, or any of our team if you've got any questions or you have a scenario you'd like to run past with us.
Excellent. Well, thank you everyone for joining us. It's been an absolute pleasure, and we hope to hear from you all soon.
Thanks everyone, appreciate your time.